Good morning and welcome to Morning Markets with True Potential. Today we'll be focusing on the UK inflation number which came out this morning. UK inflation dropped this morning. We saw dropping to 8.7% in month of April on annualized basis from 10.1% back in March. Although we saw a little bit tick up in core inflation to 6.8% from 6.2% in March. So what was behind the drop in headline inflation? It was entirely electricity and energy prices, which came through April. The drops we have seen in recently has contributed to almost 1.4% drop only coming from electricity and energy prices coming down. In fact, if we continue to this trend was to continue in summer months, we'll expect by July months it'll be energy and electricity drops in prices will have a net no contribution to inflation. In fact, if we move to autumn months, it'll perhaps become a net drag on overall inflation. Less good news was food prices that continues to rise. Food and non-alcoholic beverages rose by 19.1%, quite a marked stubbornly high inflation print there as well. However, if we look at the divergence, we have seen the recent purchases price, the input prices for manufacturer and food retailers have eased quite materially over the past couple of months. If that has to play out, we will expect those softer prints from input cost for these food producers to pass through to consumers in the summer months. And if the recent month-on-month drops in input prices have to be taken into account, by autumn and by Christmas time, we could probably expect food inflations to land somewhere between around 6%. What is our take on all this? We see the trends are in the right direction, but still the inflation, both core and headline, is still stubbornly high, well above Bank of England's target of 2%, but nonetheless moving in the right direction. For Bank of England, an interest rate perspective, if we look at what matters for Bank of England is services and core inflation, we continue to see the high upward pressure on both core and services inflation. That means Bank of England probably have another 2 or 3 rate hikes still left in the kitty, and perhaps this morning we saw June rate hikes is firmly in place of another 25 basis points. What it means for asset classes, if we focus on the bonds, gilts market will continue to feel upward pressure on gilt yields for next couple of trading sessions. But this morning we saw some spike. Let's see how it progresses for the rest of the day. Sterling, on the flip side, we saw a bounce in sterling given the interest rate differential, particularly versus US dollar, came in favor of sterling. We continue to see strength in sterling markets. But as the trends are still early this morning, so we will see how they develop through the day. But for now, we'll leave it there and we'll keep you posted on any new developments over the next 24 hours. Thank you very much for watching Morning Markets.